There we go. Hello, traders. Good to see you, everybody, today. Today's an extra special day because it is my birthday. That's right. Thank you, everybody, for coming today. Madi Mahmoudi, hey, man. Good to see you. Tanvir, all right. Back again for more action. Good, good, good. Good to have you with us. Winston Churchill. Oh, Winston Chiadidi. Hey, good to see you. And Fatima, hey, coming all week this week. Good on you. Good job. All right, so we're going to do a quick wrap up for today's week. I want to ask you guys if you can see and hear me okay. Let me just do one thing real quick. I'll be right back, you guys. All right. So how was the video quality, the graphics quality? Can you guys hear and see me okay? That would be fantastic. So oil is continuing the price upwards. We are hanging out right around the 200 EMA. It looks like it's going to be a good Friday. And this would be one of the things that could drop down here, because this red candle here that you guys see, this is Friday's candle. Here we have Monday, Tuesday, Wednesday, Thursday, Friday. And this candle will drop down, or did drop down last week. So remember, I told you guys, what is it that we could see that would be an opportunity to fade for the end of today. That's why we have this in the AM or sometime around midday, so that we can discuss potential opportunities for you to make money on. So this is one of the things. Now, I wanted to talk a little bit about the Japanese interest rate decision. That was a really interesting thing that happened today. And Governor Kuroda, he was a little bit less dovish than expected, but it ended up being very USD JPY, but ended up being a little bit of volatility in the morning, but not enough conviction in any direction. So we're still, hanging up around this place. And the guidance that their Bank of Japan governor gave to us today was that the Japanese yen, or the Japanese economy, they're going to slow down production, they're going to slow down exports, and just like this is a repetitive theme that we live in currently, that we are very the growth slowdown around the world is apparent, and everybody seems to be speaking the same exact language. Now, a lot of this is due to the overseas economies, like production and consumption in Japan is staying on par. So how they were consuming before, they keep on consuming, despite having raised consumption taxes last year. Like, that was a big issue in Japan, that they're raising taxes, on consumption and on income. And so that has not stifled Japanese consumption. They're a happy bunch, and the only slowdown is the factory output for overseas exports. That's one of the things that's really slowing down. So I continue watching this currency. At the moment, there is no trade signal, because when we hug the wall like this, anytime we hug the wall, there usually is a breakout to the upside. So if it was a green candle, and then this red one dropped down through both of the EMAs, I'd be like, okay, that's a sell signal. You can sell all the way to this trend line here of 110, 109. But that's not the picture that we have. And the thing is that because another thing is that Governor Kuroda, he left the monetary stimulus program, which is quantitative easing, which is what we talked about last Friday, I believe, when I taught you guys that banks print money as they wish, and they use it to stabilize the currency. Well, besides that, they also have interest rates that they rise or lower in order to also constrict or adjust the amount of currency that is in free fluctuation. So they have came out and said, very similar to the European Union, that they're going to keep keep the quantitative easing program going. So they have been printing money, buying government bonds and stocks, just regular stocks of blue chip companies in Japan. They've been buying that for the last 10 years, I believe. So after the financial crisis, they turned on the printing press and been printing money ever since. And right now they're saying that we are going to leave that as is, but we're not going to change interest rates. What that means is that this is actually pretty constricting for themselves in the amount of things that they can do. So they can no longer turn the printing press back on like the European Union did. They just came out with a verbal intervention. That's what Mario Draghi did. But Governor Kuroda is basically putting himself in a tight spot, and that could be so what's going on in the Japanese economy? They're producing a lot and they're exporting 90% of their goods. And what that means is that their currency is losing its value because so much of their currency is out there. Because each company had to then take the money that they had from the exports and change that into Japanese yen. So there was a lot of dollars and euros being converted into yen. And obviously that raises the price of yen. And so what they've been doing when they turn on the stimulus program, when they start lowering interest rates, is they try to counteract that balance. They try to make their currency cheaper because it's getting so expensive, because their whole economy revolves around taking other people's money and then turning it into their money. I hope that makes sense. I tried to explain it as clearly as I could. And it's been a rough year. You can see that all year this year they are continually devaluing their currency, and what this will lead to, we will see in the near future. Now, the trajectory for the rest of this year is also a slowdown for the yen, but currently there's no trade that I see going on, so I would not recommend trading the Japanese yen at this time. Now, what also happened this week? Let's have a look at the different things that happened this week and just talk about it for a little bit. At the start of the week, Federal Reserve Chairman Jerome Powell, he gave two speeches, and in both of those speeches he came out and said that we were quick to raise interest rates before, so this would be the DXY. We were quick to raise interest rates before, and now it seems that and remember I told you guys that from up here we came down, and this is a flag pattern. This is a reverse flag pattern going from the top down. The continuation of this will probably down to 95, 96 because we don't have an opportunity to trade the DXY on our Olymp Trade platform. You can choose any of the stronger currencies compared to the weaker currencies. And we can find that on FinViz. I'll show you guys real quick what the strongest currency was to the dollar. Now, FinViz is a financial analytical website, very helpful in the sense of giving you research. So the New Zealand dollar has been the strongest in the last day, and the Australian dollar as well. And that was due to some of the decisions that came out on the side of the New Zealand PMI, which came out positive and better than they expected. And also that was due to just a general turnaround. Remember we were looking at the Australian dollar. Let's have a look at it right now. We were kind of expecting a drop lower, but instead from this bounce, this was a false breakout that we had, and we had a small little bounce. So this isn't enough for us to trade, and this isn't a big enough move to make money on, but it does show that the Australian currency, and better yet the New Zealand currency, is showing a little bit of strength. Now, I don't really trade the Kiwi, and this is an obvious triangle that's going in, but I would have liked to not have this growth right here, but instead just have the triangle be right here, because that would have been a continuation pattern. Whereas in the thing that we have drawn on the screen now, this looks more like a reversal pattern. And what I mean by that is that here we had the downtrend, and here we corrected, and now what's happening? Are we impulsing from the correction? Are we, reversing back to the downside? The EMAs are flat. They just came out of a downtrend. So it's really an interesting thing to look at. But remember the strategy that I taught you guys the other day. If we draw a trend line here, what happened? So if we zoom in, this is the trend line is down, the counter trend is up. Actually, we could have even drawn it here, but I want to discuss this one here first. We broke through the trend line, and then we came back into it and are now hanging out above this counter trend line. So that's one interesting moment that signifies instability and not a clear path for us to trade. So if we draw the same kind of trend line through here, again, we don't have a clear break. This is just a signal that we are not looking to go down. This is what I want you guys to keep in mind, that no matter how many breakouts to the bottom, we are not solidifying in that area. And none of these signals that we have here are tradable. So this currency is strong, but nonetheless not tradable for us. See how we break down to the bottom and then come right back up above the line, right? This is a stop loss. Now we wait, we don't exit. Now on the next breakout down, we don't take that trade down because already once we got bopped on the head, and this strategy only works if there's a continuation and follow through. All right, so that means if we break through that level, we need to keep going through that level. If we come back through it, then that's that we are no longer in a counter trend breakout reversal trade. All right, so here we had one time that we were knocked out, 2 times knocked out, then the price dropped below that level, stayed, came back, retested it, but it was really messy. We had a down candle, an up candle. Again, this up candle is supposed to bring caution to your trade. Okay, the picture should look like this, where we have a red candle, okay, maybe a doji, but it would be best to have 3 red candles, and then we know, okay, this trade is awesome, we're in it to win it. Whereas here we had, some weird candles, and so to me this looks like this could go either way. We could have a breakout above this level to 0.69 up, or we could have a break below this level of 0.674 down. I would not recommend trading this at this time. What else is strong? Let's have a look what else is strong. The Canadian dollar. Now this bad boy is one that we have been watching. Oops. We've been watching it. It had a ridiculous rise due to some weakness that came out from the Bank of Canada Governor Stephen Polis. He came out and said that, oh, our economy is doing very bad, we are having a tough time, and we are not going to be raising interest rates, and we might turn on the printing press. Everybody's like, what? Okay, that's bad for Canadian dollar, and they started to short it. And here, we dropped down to this level of resistance, and now we're stuck around here. This looks like a flag pattern if we zoom out a little bit. Again, we have the 3 candles, and remember, when we see 3 red candles or three green candles, the next candle is going to be in that same direction, so we buy or sell it. Another quick little scalping strategy for you guys, and it's easy to see on the graph. But here we have a consolidation that I'm not sure which way is going to go. If it wasn't such a strong resistance level here, and also here, if we draw this line out a little bit, I would say, okay, let's short it, you guys, because we're bullish oil. Now, what I want to see is a breakout of this level, but then here also, these purple lines are strong levels of support. They're averages that we've been having over the last, few years. So definitely looking at this currency, but not enough follow through for me to get in it. And everything else is staying flat. Dollar, yen, pound, franc. Just having doji days. Doji days. Alright, I'm just going to read your guys' chat in a sec, so hang tight. I just wanted to go over what else happened this week. So we had the Federal Reserve saying that the dollar was too strong for the dollar. And they decided to, weaken it. And all the traders caught on too. And this was one of the things that our man Jerome Powell said that, he on last Sunday or Saturday, there was a show, 60 Minutes, and he came out and said that I promise that I won't be raising interest rates in the next little while. Also, we've had retail sales in the United States show positivity, which is good for the GDP, and that also raised prices up a little bit. And probably the craziest thing that happened this week, actually, and we didn't talk about it, it just slipped my mind and nobody asked me about it, Boeing Airlines. Look at this gappy shit. Now, I'm sure you guys have heard that a few Boeing airplanes have crashed in Ethiopia, and countries like Malaysia, Indonesia, India, China, they have stopped Boeing flights. And Boeing had great contracts with those countries. Like China was supposed to buy over 200 Boeing airplanes, and now that is off the table. And so what do we have? Well, we have incredible Boeing weakness. I believe that's 80 points that it dropped from here to here. And you know, that's real negative. Now, this is what I want you guys to remember. If you know exactly what assets we have to trade right here in our shares, remember them. It's not a lot. These are the top stocks around the world. And when something happens in these companies, whenever you hear some news about, you know, maybe BMW gets involved in an emission scandal like Volkswagen did, well, not only does Volkswagen stock drop when that kind of news comes out, BMW stock drops as well. Now, this is a key thing that I, as a idea trader, keep in mind. Unfortunately, I was working on another project. I was aware of the Boeing issue, but I didn't catch that trade. So if you're a smart trader and you know which stocks you have the ability to trade, there's not a lot. The list is quite short. What do we have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 stocks. Okay, magical number 13. Keep that number in mind and keep an eye out on the news whenever you hear something. And now you can short those stocks. When volatility got crazy like this, the return on investment for, you know, these shares, they dropped up as well. Jumped up. All right, and here we have Boeing. So we could very well actually continue the downside for Boeing if the S&P 500 drops down. Look at this candle that we had yesterday. We just cannot seem to get over this line. This line of 280 just seems so difficult. So that's what we're dealing with, you guys. If we have another down week like we had last week, not this week, but last week, then, you know, we could stay in a flat. And that's what has been going on. You can see this little bounce around that we had. That's exactly what we seem to be doing now. Except there was like a 2-week bounce up, a 2-week bounce up, or sorry, a down and up. And, you know, that's the area that we're in. There's not enough oomph. There's not enough reason to be super long stocks. Right, tech stocks have been driving things down. And there's another thing that I wanted to speak on about tech stocks. We had some issues with from China. I'll also tell you about, and weaker than expected reports from Apple. And as you guys know, the FANG stocks, Facebook, Apple, Amazon, Netflix, Google, those guys are the drivers of the NASDAQ index. And they're also the drivers of the S&P 500 because they have a lot of weight in this index. And we had people we had companies that aren't in the top 5, but nonetheless they're powerhouses in the IT sphere. We had Oracle, Adobe, extremely negative, and because they gave an outlook, they gave there was a conference having to deal with tech and programming, and they came out with very negative news, having to deal with how much sales they're going to have for the rest of the year. So obviously this first quarter they had weaker than expected profits, and they are expecting even much more lower. Yeah. So that's another thing to keep in mind. The sector of the tech stock sector could be showing weakness in the coming week. So what else did we have this week? In Europe, we had German CPI come out, which was negative. In Switzerland and France, their CPI came out. It was a little bit better. OPEC came together and solidified their agreement of slowing down production. Saudi Arabia actually was the leader in that agreement, and we had reserves. So this huge jump up was Wednesday's reserves, which was a huge whopping minus 8 million to oil reserves. And later on today, the day is not done. We're still going to have CPI from the Euro zone area, from the core Eurozone, and it could be a 20% difference. So for those of you that are looking for a trade today, we could be on a down leg down if the European Union CPI comes out very negative. So that's something to keep in mind. We still have news. It's coming out in half an hour. So at the end of this webinar, keep track of the Euro Union and keep track of your economic calendar. 1 second. There we go. So here we have today is Friday. Here we go. So this is what we're still waiting for right here. I want you guys to keep in mind that we had a huge slowdown from Germany for the last 2 months. They've been underperforming in the consumer price index. And so we could have a yearly surprise and also a monthly surprise, or it could be flat, in which case, where would the euro go? Well, if people have been buying in the positions for the last week, we could drop down to 112.78. So that's another currency to keep in mind, you guys. So out of the really interesting things, that's what I have for this week. I'm going to read chat and answer you guys' question. Oh, thank you guys so much. Awesome. I'm going to have a great birthday because it's a lot of people have already congratulated me. A little blurry, but it's fine. Thank you, Tenvir. Awesome. Jimmy from the Philippines. Hello, Mr. Esmiris. You guys, do you have any questions for me today? Because if you don't, there's only a few other things that I wanted to discuss, and we will part ways for the weekend. Now, over the weekend, trading does continue in Bitcoin. Let's have a look at their graph. So after this huge break of this level that we had from all of 2018, we dropped down and we have not been able to get above this level. So before we had a level of support, now we have just a level of resistance that started from this level here, which was before the announcement that Bitcoin was going to be trading on the CBOE, Chicago Board of Exchange, and the CME, Chicago Mercantile Exchange, which is both commodity trading. They're not stock markets. Exchanges. They're commodity exchanges. And that still remains the case, that they're still trading there, but as you can see, Bitcoin seems to be going down. There's not a lot of volatility to be had in the last year that we've had. I mean, there were a few spikes up, which seemed to get optimism going, but then we dropped back down and stayed flat. We are trading, though, above the 50 EMA, but we are see how things are growing here, but things seem to be falling here. This is the picture that we're dealing with. So what else did we have that's interesting this week? China. Now this is some of the things that I wanted to talk about. The Chinese Premier Li Keqiang, he finished the National Congress. So the National Congress is basically when all the Chinese leaders get together and they discuss their policies for the year. Now you have to understand that they are a communist country, so they decide economic policy together as they see fit. And so in Beijing, they decided to stick with the current economic strategy that they were having, and they're resisting the temptation to change or engage in large-scale stimulus, which is what's happening in Japan and all over the world. And this is leading to growth. Let's have a look at the price of the Chinese yuan. So they've been strengthening all of this year, and they're below the moving averages. All in all, this is a really interesting scenario. Now, China has before been not convicted, but they've been accused of currency manipulation. Now they are really showing that they are not going to be partaking in any kind of currency manipulation. So it's really a nice change in the way that their government is conducting their affairs. And on the subject of the trade relationship with the United States, right, the U.S. remains the main competitor for Chinese goods and for Chinese services, but it's also the biggest consumer of Chinese goods and services. So there's going to be another meeting between President Trump and President Xi Jinping, and they're going to sign a deal, but that won't happen until next month. And on that news, actually, the stock market in China rose pretty well. So this was a graph that we were looking at over the last 2 weeks, and we are also right at this level of resistance. Now, it's very very cute that the Chinese stock market and the U.S. stock market are both hovering really close to their levels of resistance. And when a breakout does occur, we can do two things. First, when we break out to the upside, we wait until that impulse finishes and then fade that sucker on a lower time frame, say 5 to 15 minute time frame. And you can do that both with the Hang Seng Index and the S&P 500. And then afterwards, when you finish the fade, it should only be a short trade that you make your 10% or 80%, whatever you're trading. And when you do finish that trade, then you watch to see if price will continue up higher. Okay, a level of resistance that we could have would be this guy here. So if we do break out, retest, we could go up to somewhere below 29.50. All right, guys, that's all I have for today. I know that Mr. Tanvir has a question. I am very keen on answering it. How many traders, or many traders, say that Monday is for the market makers and that we should avoid trading on that day? Is this true? Because they say that manipulate prices. is market makers. Absolutely, market makers manipulate prices. I think that's the whole reason for stock markets and currency markets, is so that big banks and big companies can manipulate their own prices. And how does that happen in the US? So in the stock market, companies manipulate their stock prices by not paying out dividends to existing investors, but by buying back the stocks that they gave out. So when they buy back aggressively all their stocks instead of paying dividends, their stock price climbs up. And this is legal for some reason in the United States, and it's been a huge practice over the last 2 years, when last year we've had the tax reform come through in the United States. All of last year we talked about tax reforms, and the stock market climbed on that news, and it was that big whole Donald Trump bull run. And then afterwards, companies did that sneaky move of buying back their stocks. And there was a huge issue from investors, like, is this legal? Is this ethical? But they do it nonetheless. And like we said, big banks or government banks, they do the same thing with their currencies. So they print their own currency, then they buy other currencies with that money in good times. And in bad times, they use it to strengthen their currency. Right? It's like very simple, to be honest with you. It's not anything technical whatsoever. And there's a game that I found online. It looks like how easy is it to control prices lowering and increasing interest rates. It's near impossible. Like, you move your mouse just a little bit up and a little bit down, and the price just goes whop, whop, whop. It's super hard to keep it stable. So if we believe that they're very technical and precise in the way that they up and lower their interest rate, they're not. It's almost impossible. It's like a balancing act where you put a stick on your forehead and you try to balance it. That's easy. I've tried at home. But what's not easy is trying to balance a whole entire economy with 50 million people in it or 1 billion people in it by lowering and raising the value of their money. Super duper hard. Now, I will address your question. I know I kind of did a long speech on that, but I think it's something that's interesting for you to learn and that will help you in your trading. But I don't trade on Mondays and I don't trade on Fridays, because those days, statistically, when I look at my trade history and I break them down into how much I made on each day, I realize that either I break even or I drop into the negative territory, like on Fridays. On Fridays, if I have trades that were on over the week, that Friday will eat up all of my expenses and hit my stop, sorry, not expenses, eat up all my profits and hit my stop loss. On Friday, when I make fundamental trades, I enter in the morning and then I come back to the trade terminal in the evening. I was in positive territory. We barely missed my take profit, and now we're back in negative territory, close to where we started, or even hitting my stop loss. So Mondays and Fridays, I don't really like to get into that voodoo of market manipulators and market makers, because we don't know. For 100%, we don't know. I mean, we are confident that markets are manipulated, but we don't know if they are and when they are. Okay, so I like to have high probability trades, and this is more of a math game than anything else. So I want to be sure when I'm putting a trade on. And on Monday, the trend is hard to see. I mean, look at this. This was last week. We came down here, and Monday was just crazy bullish. Okay, now when we see that crazy bullish candle, then we can make a trade. Whereas, when we have this Friday and then I open up my terminal and we're right here, right? The first part of Monday was just that teeny tiny little bit of the candle. We don't have enough oomph. We don't have enough information to go off on Monday. And on Friday, it's counterintuitive. So I hope that answered your question. No, it's not too personal. That's a great question. Okay, so Mr. Tenvir, HGTV, has asked me why I've never shared how I started my life as a trader. How did I cope with the ups and downs? How did I come to this level now? I hope it's not too personal. Before this, I was an athlete, and also I was in business development. I helped to promote Western exporting countries in Russia. We had some big client names like Redline Communications, Arctos Developments, and we tried to help Western companies enter the Russian market. Now, I had a stock portfolio since college, so for the last 10 years, I've known about stocks. But I trusted that to professionals. So I invested in a few hedge funds and a few personal asset allocation managers. And that was really interesting to me. Like I used some free time to learn about the economy. I had an economics degree and stayed with that. And then in 2013, 2014, the Russian ruble just collapsed, and I made some money on that because first of all, I was receiving my salary in dollars, and second of all, I realized what was happening. I knew how to read graphs, and I knew that war was a huge risk to political stability, and everybody was worried that we were going to have a war with NATO. And that trade ended up being amazing for me. I earned 1,002,000 rubles and 200,000. And I realized that, holy smokes, what have I been doing? I should have been trading this whole time. And so I started dabbling in currency markets. I went to a lot of traders. I spent a lot of time and money. I lost a lot of money. I mean, it wasn't quite a lot. I think over the first year, I lost $4,000. And that was like 10% of my yearly income at the time. And so I decided to learn more, and I went on a demo account, and I changed jobs. I stopped doing that and I started only trading, and I started from the bottom, right? I went to a brokerage company and I was just the sales guy. I would be support, anybody has questions about the terminal and about anything else, I would just answer the phone. Sometimes I would help customers. I would teach people how to use the terminal. And then later on, as I got more familiar with the brokerage business, then I started being in the investment committee. Basically, I helped put together portfolios for big clients. So we had bonds that we would take. There's a huge list and a mathematical formula that you apply to bonds where you measure the average beta and the risk parameters of that bond and of that company or government. And then we would compile this and then send it to our investors, and they would either decide to invest or not to invest in that portfolio. And that was my third year working in different brokerage companies, and during that time I made my clients over 47% in half a year. So I entered that company at the end of 2016, and 2016 to 2017 was very productive. At which time I realized that, hey, I can do this by myself. I went solo. I got some investors that were my clients before. I had a total of $70,000 under management. It was a client of 50 and a client of 20. I made about 20% on the Forex market for those guys, and then it became too hectic. Like when there was off days, when there was like political instability and I wouldn't trade for a week, like when Emmanuel Macron was balloting for president. I didn't trade that time because we thought that the lady was going to win, but nonetheless Emmanuel won, and the clients kept pestering me. A week went by, there's huge moves, so everybody becomes a professional overnight, and they were telling me how to trade. So in the end, I wrapped that up. I gave them their earnings of about like 30% for the year that we were together, and then I kind of and then I got headhunted. And then I got headhunted into different companies, and now I still have my own portfolio, and I make a salary as well, and I'm pretty happy. I just decided not to trade clients' money for the time being, but I am keen on continuing trading my own account, and I will continue to give you guys good trades and opportunities. So that's a very quick rundown of how I made it. Oh, and what does it take? Like, that's the thing that you asked. What does it take? It's probably going to sound very simple, but sacrifice of time, sacrifice of a personal life. During the time that I was learning trading, I had no personal life, and I was in my late 20s, and I needed, I felt like I needed a girlfriend, but because all of my time went to trading, I wasn't even at that level of a guy. Like, I quit going to the gym. I would trade for 8-9 hours a day. Then I would read and watch videos when the markets were closed, and just completely immersing myself for 12 to 15 hours a day into trading, and doing that every single day for a few years. I mean, if you do anything like that, if you play a sport, if you play tennis for 15 hours a day, you're probably gonna win Wimbledon, or at least you're gonna participate in Wimbledon. But it's the same thing if you start a business. Like, I mean, I've said this before. A friend of mine that I went into trading with, he then opened up a coffee shop, and all of his time went to coffees and opening up new locations. And we make now about the same amount of money, except I did what I wanted to do very consistently, very disciplinedly. I don't think that's a word, but if you do anything in life with 100% conviction, and there is no out. Like, I told myself, if I don't make it in trading, I'm not going to make it anywhere. This is my only option. And I did that with every single way. Like, all my friends were traders. I only took trading jobs. Like, I no longer wanted to be in sales. I no longer wanted to do business development. And I had my ex-partners, they came in and offered me like huge salaries. And I would say, I'm starting a hedge fund. I don't want to do anything else but trade. If you guys want me to multiply your money, this is my business plan. These are my trade strategies. I can take your money under management. And they said, oh, no, we got to invest in our own business. Come be with us. I had to turn that down. So it's sacrifices. It's sacrifices, consistency, dedication, just like in anything in life. And that 1%, or I don't know, 10%, 5%, whatever that small percentage of people that can give this much of their life to something, You got to be dedicated to something, whether it's your family, whether it's your job, whether it's your calling in life. If you dedicate yourself to that and you do it for many years, I think that success has to come. But again, it's the position that you take, whereas do or die, do or die. I'm going to make it or I'm not going to. And I don't want to sound stupid either. Like, I'm not stupid. I went and I got a bunch of certification in Russia from the central bank. Like, I'm certified in Russia to be an official financial advisor. I can advise people with up to $10 million worth of net worth, and I can do it legally. And I took what is it called in English? I took courses how to evaluate companies, like government companies and non-public companies. So if trading ever didn't work out for me, or I took such a big loss, or a string of losses, I always had a backup plan, and it always had to do with finance. So I could always go and work for a mid-tier company as a financial director, as a financial analyst, and I kept on doing that, right? You always got to have a backup plan. Like, my plan now is I'm getting my CFA. I'm studying to get my certified financial analyst, which is an international accreditation that only 60% of people make that go for that certification. So that's the business plan for my life in a nutshell. Anyways, I hope that helps you guys. Yeah, I don't like your name, Mr. Nike. Anyways, you guys take care. It's been an awesome, yeah, thank you for that. I appreciate your support, Tanvir. I'll be happy to see you again on Monday. You guys please come in where on Monday, if I do see a good trade, I will call it out. But on Mondays, we usually take that hour long to plan for the week ahead. It's a very good day to look at how the trends are forming, what happened over the weekend, and to not rush it. I mean, I don't recommend rushing into trades. I recommend trading 3 to 5 trades a week. A week. That's right. And actually, in the United States, if you want to be an investor or a trader, first of all, you need to have at least $25,000 on your account. And if you have less than $25,000, then by law, you can only make 5 trades a week. That's really interesting. So basically, the people that make the laws that govern the financial markets, they came up with this, that if you don't have too much money, you shouldn't be losing too much money. And so they came up with a way to limit over trading. Like, we had a girl, I believe her name was Brenda, last week. Hey, Johnny, good to see you. Hey, at least you can make it. You can listen to the webinar from the beginning when we finish, but I'm glad to have you with us in chat. So I think Brenda yesterday, she wrote that, what is a good amount of trades to make in the day? Should I be making 1,000 trades a day? No, you shouldn't. You should make as little trades as possible, but make them really good and have the right risk to reward ratio. So that's what I wanted to get across to you guys. Really awesome to have you guys with me. Thank you for your good wishes for me today. I wish you guys success in your trading career. I want to wish you not to give up. It's definitely the profession that is worth the time invested. To me, it's the most interesting profession in the world. Like, I mean, when you trade, you know exactly about what new technologies out there, what kind of new drugs are out there. And I'm talking about the biotech, health tech sector. You know all the new medicines, you know all the new companies that are out, you know everything that's cool and happening and moving. And you know it has to deal with money. There's always good reward when you deal with money. And you know, it's just interesting to me. I do what I love. And I want to say that if I can make it, I'm not somebody special. I'm not the smartest guy in the room. But, you know, I make up for that with dedication, with enthusiasm, with motivation. You know, sometimes when I first started, like, that's a great question, Tanvir. When I started, sometimes you're looking at the screen and you're like, wow, is this my life? I'm making bets on lines and dots and candlesticks on the graph every day. But to me, when I look at the graph, I never ever had the feeling like, wow, this is boring. Never had the feeling. And never did I get the feeling that I was gambling. Like, I never had a problem with gambling. I played a little bit of poker in college, and never was it like I'm gonna make a bet and see what happens. I never had that. I always approached it very technically, very thoughtfully. So, like I said, if I can make it, so can you. But it does take a certain skill set, and you should get those skills by practicing and by researching. Practicing and researching and never stopping. Like, I don't plan on stopping ever learning either. This is another thing. When I finish my CFA, I'm going to get a bachelor's degree or a master's degree in psychology. I have 3 degrees already. I'm an IT specialist. I have a theatrical background as well, and I'm finishing my economics degree, my master's in economics right now. So after I do that, I'm obviously going to continue, and I think psychology or programming is going to be the next direction I take, because those are things that will increase my trading and help me later on when I decide to program my own robots, or to fine-tune them, or to trade big size and then analyze the psychology behind day trading and short-term price action. All right. So, wow, a lot of stuff I told you guys, maybe a little bit too much of my No, it's not necessary. Nothing is necessary. I mean, I know guys that trade just the chart, and they trade with their probability is low. They're around 45% per trade, but they make up for it to risk to reward ratio. So they risk 1 to 5 or 1 to 7. So very rarely they get a trade, but when they get that good trade, it's a huge winner. And they cut their losses super short, like sometimes break even, sometimes like minus a cent or minus 5 cents on the stock market. They're stock traders. And they don't use like any of the crazy ass tools that I talk to you guys about. They are very, down to earth. They make 20 points a day. Like, I know Forex traders that make 20 points a day, and then they close their terminal and they go live their life with their family. So just my ambitions are huge, right? I want to have a ridiculous amount of money, and I want to be as successful as I can be. So I'm really putting my foot on the gas and trying to make it in life. So if you're happy with the life that you have, then what you need for trading is a good solid strategy, or a few strategies, so that you can make money in any economic climate, and consistency. You just stick with the graph and you stick with what you're doing. You don't need to have a programming background. You don't need to even have a mathematical background, because all of that is in the terminal for you with the indicators. And yeah. All right, you guys, that's it for today's webinar. My name is Yaroslav Birchenko. This has been Olymp Trades Follow-Up Friday. I wish you guys good luck trading out there, and see you on Monday. Peace.